It is hard to believe that we're heading into the end of 2024. And as we're circling the wagons, coming out of another crazy year in the real estate market with fluctuating interest rates, super disappointing home sales, and home values that just won't quit. What is in store for next year? So that's what we're going to dig into today. We're going to take into the housing market predictions and who the winners and the losers are heading into 2025. So as I was researching for this video, I came across some articles that were very telling for what we might expect heading into next year. And I want to dig into the first article, which is Zillow's housing market predictions for 2025. Zillow predicts more buyers will come out ahead in a bumpy 2025, but unpredictable mortgage rates cloud the picture. The plot thickens. Mortgage rates are once again in the spotlight as 2025 approaches. A short-lived dip to two-year lows prompted renewed optimism for home buyers. We did see that before the rise in October brought a reminder of their unpredictability. Buying a home in 2024 was surprisingly competitive, given how high the affordability hurdle became. Buyers can expect a little bit of breathing room in 2025. We did see that. We did see growth in areas that we did not expect growth. Zillow predicts a more active housing market and more buyers gaining the upper hand in 2025, but those hoping to buy or even refinance should buckle up for a bumpy ride and stay ready to move when conditions are right. Rent affordability is on track to improve next year as long as wages continue to grow after a construction boom has eased pressure on rent prices. There is a lot going on in here. There's a lot of uncertainty. I will make a side note here that this article is, there's a lot we don't know heading into 2025. And one of the things that we don't know is the fact that we are heading into a new presidency, and what this new presidency will, the policies they will enact, the changes that will be made will affect the housing market in some way, shape, or form. And as much as we can predict based on the data that we have, that data is incomplete, because until we have the data of what the presidency sets, then we will be able to react to what actually happens. So a lot of this is hearsay, but some of it does have some merit. So if we dig into the housing market activity itself, Zillow says that we should expect to see more sales and only modest home growth in 2025 as the market slowly becomes unstuck. Zillow forecasts 2.6% home value growth in 2025, a relatively slow pace that is similar to this year's growth. For existing home sales, Zillow forecasts 4.3 million in the coming year, up slightly from 4.1 million in 2023 and a projected 4 million in 2024. So what they're talking about here is a national average. On average, how much do they anticipate home values to increase? Now, obviously, this is going to be area specific. Some areas of the country will see absolutely no growth. Some will see price declines, which I'm going to get into in a few minutes. And some will see way above 2.6. Now, that 2.6 value, interestingly enough, is a little bit below what the National Association of Realtors, they had a summit last week before, that they predicted the Lawrence Yun, who is the senior economist at National Association of Realtors, predicts a 2.9% home value growth. So again, a lot of it is going to depend on supply and demand, which we're going to get into in a little bit. The article says that while affordability challenges will remain, buyers should expect more homes on the market, meaning more time to consider their options and more leverage in negotiations. Will there be more homes on the market? Time will tell. A lot of that's going to depend on new construction. Again, a little teaser for in a minute, a little bit later in the video, I'm going to dig into the new construction a little bit, touch on that and what we might see in the new construction arena. I think that's where a lot of the inventory is going to come from. But in terms of more time to consider their options, I will just say as a side note that in general, we have seen the time frame for buyers submitting offers lengthen, regardless of the market. Even here in Massachusetts, when a seller puts a home on the market, we have a very competitive market here where homes are not sitting. If they're priced properly, they do not sit on the market very long. But even then, it is not the way it was during COVID. Even if it's selling at or above asking price, it takes about a week, maybe 2 weeks before a seller gets an offer. And that's just because buyers are taking their time. They want to make sure that they do their due diligence and their homework before they submit an offer. So already seeing some of this, in action, even in the, high demand areas of the country. Moving on to mortgage rates. And mortgage rates is a sticky subject because mortgage rates has fluctuated this year. We were hopeful that they were going to come down. They did for a short period of time, but then went right back up. And Zillow says that signs point to mortgage rates easing in 2025, but as we saw in 2024, mortgage rates rarely follow the expected path. What is more certain is that buyers should expect plenty of ups and downs throughout the year. Mortgage rates fell in September, briefly bringing the share of affordable housing to a 19-month high. They have since climbed back up to nearly 7%, changing the affordable picture for homebuyers. More swings like this are expected in 2025 with refinancing sprints occurring during the dips. What we will likely see, and the big thing that I would want you to take away from mortgage rates and as we're looking forward into 2025, is that the general public and the media included, often connect the federal fund rate, what Colin Powell says, what the Federal Reserve says, when they dip rates, when they adjust rates, whether it be 50 basis points or 25 basis points, when they drop rates, that has a direct connection to the mortgage rate. And it absolutely does not. Mortgage rates are not connected to the fund rate. Mortgage rates are connected to the bond market. And the bond market is really what you want to follow because that will determine what will likely happen with mortgage rates. What happens with the bond market, and which is more connected to the stock market, to the investors, and how the investors feel about the health of the market and the economy in general, that affects how the mortgage rates go up, when they go down, which is the reason why mortgage rates went down prior to the federal fund rate dropping by 50 basis points earlier this year. The federal fund, the Federal Reserve is planning to drop the federal rate going into 2025. Will that affect the mortgage rate? Time will tell. I think that is something that we need to watch. From what I've heard, it will drop into, I think it's reasonable to expect that we'll see the low sixes, but I don't think we're really going to see beyond that heading into even the latter part of the second half of 2025. But again, something that we will have to keep an eye on. So then the article gets into some home buyer and seller trends heading into next year. It says that the buyer's market will spread to the southwest. Currently, 13 major metro areas are buyers' markets where buyers have the upper hand in negotiations, according to Zillow's Market Heat Index, with most of those in the southeast, which is what we've seen. We've seen Florida, Georgia, Louisiana, Texas, up the East Coast a little bit. Those areas are very active. The inventory levels are back to prior to the pandemic, to 2019 levels. We've seen increased inventory, which does put downward pressure on the market, where you are going to have pockets. The East Coast of Florida is much busier than the West Coast of Florida. A lot of that has to do with weather, with the hurricanes, and seasonality, but there is an increase in overall inventory, which is going to dampen those markets. This is predicting that is going to spread to the southwest. So now we're going to move that over to Arizona, Nevada. California is already starting to see that. California has absolutely starting to see slowdowns where homes are taking longer to sell. And again, when you're looking at this from a national perspective, what's super, super important is that you don't take one area and assume that the country, that's a direct reflection of what's happening in the country. Oftentimes I hear that in comments on the videos that, you're seeing a lot of homes in your market, you're seeing a lot of homes on your street or in general that aren't selling, and it's not relative to even the state as a whole or the part of the country as a whole. So it's important to know, in general where things are happening, what the shift is, and that's what we're talking about here. Is it's a slow spread. We're spreading from the southeast, and now they're saying that it's going to move over to the southwest. It goes on to say that these buyers markets. Interesting that they say that these buyer markets have the greatest number of movers, while sellers feel the heat of competition, as buyers will have more homes to choose from, and that's something that we will see more of. The sellers are going to have downward pressure. If you have your house on the market and it is not selling, likely the price is too high. 9 times out of 10, if the house isn't selling, that is exactly what's happening. The home value that you anticipated is not in line with what the market is telling you. Market dictates what the home is worth. The market is a direct reflection of what the buyer's willing to pay. And if a buyer's willing to pony up the money for your home, on average, that means that your anticipated asking price is too high. And we're going to start to see that more and more. It goes on to say that if mortgage rates fall more than expected, that dims the prospect that buyers' markets will spread west. It is anticipated that a significant mortgage rate dip would bring more buyers and sellers back to the market, increasing competition and tilting negotiating power in favor of the sellers. So it'll be interesting to see if mortgage rates do fall more than expected. My opinion is that is not going to happen. That is not going to happen. I think that again, we're going to have to wait and see what happens with heading into the overall economy and the jobs market. What will happen with the economy as a direct reflection of inflation. If we see an inflation, if we have an inflationary period heading into 2025, that will drive these markets down, and potentially we're going to be looking at even a slower housing market. But this is something that we'll have to watch, and it's interesting to see that we're starting to spread across the country. Another trend is that they say that Americans embrace small home living, and this is something that we 100% have seen more and more. The pandemic era need for more and more space is over, they said. Home buyers are increasingly lean into smaller homes as more sustainable, affordable, and desirable way to live. The term cozy. This is very interesting. The term cozy is appearing in more listing descriptions, 35% more in 2024 compared to 2023, reflecting current design trends that have shifted away from cavernous open floor plans toward contained spaces that have their own style and purpose. I actually did a video on home trends, and one of the things that I saw when I did my research for that video, I noticed that open floor plans are going by the wayside. People in general are leaning away from open floor plans. Open floor plans were very popular for a long time, all inclusive, everyone's spending time together. Coming out of the pandemic, people don't want to be around each other. They want some space, and it's not as practical. It's just not as practical to be, smelling every smell that's coming out of the kitchen while you're watching the television, or if you have people over and they're talking in the kitchen, you can't hear the television, or you're working from home and you need a designated space. Open floor plans are starting. The trend is definitely shifting. The word cozy appearing in more listing descriptions is very interesting that is coming up, and it'll be something to watch for when we see more new construction, to see if the builders react to this trend, and if we start to see smaller homes as a result. If we start to see smaller homes by the builders, if we see a shift in regulations where the builders are, that's more appealing for them to build these smaller homes, that is going to shift the entire housing industry in the positive direction, because now we're going to be tapping into the affordability of the market. We're going to be filling that need for home buyers that don't want these huge cavernous spaces. They can't afford to buy that. They want the smaller, cozy places. It says home values of small condos are finally stabilizing after remote work left downtowns more empty. even while home value appreciation of on large properties, though much stronger, continues to soften. This is something, again, that's an interesting statement, because the one thing that I've noticed, and a trend that I've noticed, is that a lot of remote workers are going back to work. And I've seen a lot of folks reach out looking for referrals because they need to sell and move back to the city. They need to sell and get back to, the place wherever they were working remotely, so they could live maybe even another state while they're working for a company. The company says, no, I need you back here in the office at least 3 days a week. Then they end up having to move. So I don't know that in terms of, the remote work, being sustainable over the long term. I think that will be a presence, but I think that small condos, in relation to the affordability, because a smaller property is going to be less expensive and it'll be an easier way for people to get their foot in the door into the housing market. I see that as an opportunity, especially for home builders building, new construction for smaller condos, smaller condo buildings, giving first-time home buyers an opportunity to get their foot in the door, as opposed to, buying a house. Now I want to move on to which areas of the country are going to see the most appreciation and which are going to see the most decline in home values. So this article by Fast Company says that this housing market map shows Zillow's revised 2025 home price forecast. It says that this week, Zillow economists announced that they expect home prices, as measured by the Zillow Home Value Index, to rise 2.9% between October 24 and October 25. So we just talked about that in terms of what that looks like. It says that while Zillow economists predict a 2.9% increase in national home prices year over year, they only expect a gradual increase in existing home sales in the coming year, with an estimated 4.3 million sales in 2025, up slightly from the 4.1 million transactions recorded in 2023 and 4 million in 2024. So this map, and I will have links to these articles in the description so that you can actually go through this map, look for your area. This is an interactive map that shows you exactly which areas of the country will see appreciation and depreciation depending on where you live. And you can kind of see those areas, that south coast area, that southeast area that I was referring to earlier, that you can see the appreciation, but you can also see the amount of growth that's happening in those areas. So we can see that this area down Metro, the Miami Beach, is anticipated to have a 3.8%, whereas, we look at Dallas is looking at 1.2%, Atlanta, 2.6%. But we want to look at the top areas. And it says that among the 400 largest U.S. housing market, Zillow expects the strongest home price appreciation from October 24 to October 25 in these areas. And you're going to see a trend. So we've got Atlantic City, New Jersey, Kingston, New York, 6.1%, Augusta, Maine, 6.1%, Pottsville, PA, Tennessee, Vineland, New Jersey, 5.7%, Lewiston, Maine, Concord, New Hampshire, 5.6%, Bangor, Maine, and then Muncie, Indiana. So it's interesting to see that this is no surprise that these areas are primarily in the Northeast. The Northeast typically does better when it came to every cycle, every housing market adjustment, whether it be the recession, or the great financial crisis, any adjustment that we've had over the last 50 years, the Northeast feels it, but we do not feel it as much as other areas of the country. And we're usually the last to make that adjustment. So for example, in our area, it is starting to soften. We're looking at Metro Boston 2%, which is interesting that it's not in those areas. It's interesting that Massachusetts is not anywhere listed here, but New Jersey, all these are New England areas. Muncie, Indiana sticks out like a sore thumb. I will be watching Muncie, Indiana. I'll be watching Indiana in general to find out what's happening in Indiana. Why? What makes that a hotspot? What's going on in those areas? And there are certain areas in the country that are sleeper areas, areas that people don't know about, people that are taking advantage of to get their foot in the door for home values and getting in before the home values go up even higher. So these are the areas that are anticipating appreciation above the 2.9% appreciated nationwide. But let's also look at which areas are going to be struggling. And this is not going to come as a surprise. It says, meanwhile, Zillow expects the weakest home price appreciation between October 24 and 25 to occur in these markets: Lake Charles, Louisiana; Houma, I hope I'm saying that correctly, Louisiana; Lafayette, Louisiana; Johnstown, PA. That's very interesting that there is a Pennsylvania town included in this, negative 3.9%. New Orleans, Eureka, California. We got a little bit of California in there, and that's going to be that migration from the southeast to southwest. Beaumont, Texas; Odessa, Texas. Shout out to Friday Night Lights. I just watched that series. Shreveport, Louisiana; Hammond, Louisiana. Louisiana's struggling. Louisiana has been and is struggling. And, folks that are down there, my heart goes out to you. But you can see where there's a little bit of progression going from southeast to southwest. This is something that we are going to continue to watch over the next 6 months. We'll do a recap. We'll check in 6 months' time to see if that's changed at all. But these are the areas, these are the hot spots that are predicted to see the most and least appreciation. Now, I want to touch on new construction and what we might see heading into 2025. Now, there are a lot of changes coming in the arena of new construction, and I talk a lot about this on my live streams in terms of policies that may be coming from the new administration in relation to easing of regulations to allow home builders to build more, the potential impact of immigration, the immigration policies, potentially negatively impacting the labor force in new construction, which is already struggling, and how that might all tie into the availability and home prices. How are those home prices, home values going to be affected in connection to the new construction market? So this article that I pulled up, which is, it says it's an interview with Fast Market's in-house expert Jennifer Coskren, I hope I said that correctly, Director of Wood Products and Timber, and at Fast Markets. And so, she kind of reflects on, what does the demand look like compared to this time last year. She says that in 2024, U.S. housing demand has declined primarily due to high mortgage rates and economic certainty, okay, which we are aware of. It says that while a slight increase in housing inventory offers more options for buyers, affordability remains a significant challenge as home prices continue to rise. The effects of the Federal Reserve's rate cuts may only translate to improvements by mid-2025. I just touched on this a few minutes ago. The Federal Reserve rate cuts do not impact the mortgage rates. This is one of the things, and this is one of the reasons why you need to fact check your articles, because not every piece of information in all these articles is accurate. I will say as a side note, when I do my research for this content, I double, triple, quadruple check the articles against each other to make sure that I have the closest thing I can possibly get to as accurate data. But going on, it says that in contrast, new home sales have increased by 3% through August 2024, thanks to attractive rate buy-downs options from large builders. Moving forward, a balance between demand and affordability will hinge on housing supply, the ongoing affordability crisis, and labor markets in the short term. So I just mentioned this about the labor markets. The buy-down options we have seen this year. We've seen that a lot, especially in the southern states, which are the states that are producing the largest amount of new construction. We're talking about Texas. We're talking about Arizona. We're talking about California, Florida. Those areas are where we're going to see the most amount of new construction. And a lot of those builders, because the areas in Florida and some areas in Texas have reached 2019 inventory levels, those builders are now having a little bit of trouble selling those properties. And so in order to do so and remain competitive against their competition, they're offering buy downs on interest rates. So there are a lot of great deals. There can be, if you do your research, do your homework, there are a lot of great deals. And I think that we may be seeing more of that. It says, what is the underlying trend level of housing starts based on demographics? The housing market has consistently fallen short on demand. It has since the great financial crisis of 07, 06, 07, 08, where construction almost came to a halt, and we fell behind in those new units that need to be produced. It says the housing market has consistently fallen short on demand, especially after the 2008 financial crisis, when construction slowed significantly. The annual housing supply needed to be at approximately 1.5 million units, but we were only about 1 million units were delivered from 2008 to 2019. We estimate a need to catch up at about 2 million housing units. That's a lot of houses. 2 million. Let that sink in for a second. It says that local zoning laws, permitting processes, and land use requirements have further restricted new housing developments, particularly affordable and multi-family units. We just talked about that, worsening the supply-demand imbalance. This shortage is most acute in growing populations, leading to rising home prices and rental costs. Without policy changes, regulatory reform, and increased construction activity, this underbuilding trend is likely to persist. The National Association of Home Builders is very optimistic with the new administration coming in because of the proposed policy changes. So that is something that could absolutely propel the new home housing market. It goes on to say that, what is your view on the U.S. housing stats in 2025? Construction will ease about 5.5% this year, with the single family component of our forecast still up 5% to just 1 million units. While the September rate cuts by the Federal Reserve may not immediately boost the new home construction, future costs are likely to encourage sidelined buyers to enter the market. Again, the Federal Reserve didn't impact the market. The bond market impacted the market, and the bond market positively impacted the interest rates that fell before the Federal Reserve met in September. And then when the Federal Reserve cut their rate again in November, it had basically no impact because of the bond market. Now the stock market's doing very well. After the election, we might see some downward pressure on those interest rates going forward over the winter. It says that we are expecting an improvement in construction in 2025. We anticipate a rebound in both single-family and multi-family starts, with a forecast of approximately 1.5 million units, of which 1.1 million are single-family. Both single-family and multi-family are forecast to be up around 11%. If this happens, this will be very good for the housing market. If we have more units coming into the housing market, that means more choices for buyers. More choices for buyers, that means that there'll be less demand. Less demand, downward pressure on prices. So when we have downward pressure, that's a good thing. That's a very good thing. I will again revisit the fact that this is all predicated around what will happen with the new administration. And if the immigration policies negatively affect the housing market, the new home construction housing market, as pertains to the labor market. The labor market is hurting in this country, and we need more laborers. That whole industry needs to, we need to have a seismic shift in how we bring new folks into that industry, into the labor industry, and enticing younger folks, younger generation to come into the labor force and not just go directly to college, because of the fact that there is a huge shortage. I read an article the other day that by 2031, 40% of the construction field labor force will retire. And that is a huge hole in the labor market. Who is going to build these homes? This is going to be the question. If that becomes an issue, we're going to see these numbers change. So now, how does this impact home sellers and home buyers heading into 2025? Well, this article by Narada Real Estate Investments outlines a few implications for home buyers and sellers. It says on the home buyer side, they should expect moderate price growth. The forecast suggests that home prices will continue to rise, but in a moderate pace. This might provide a good opportunity for those looking to buy a home, which we've seen. The stats have shown that we're looking at a smaller price growth, and depending on the area, if you're able to move to areas that maybe have a little bit more opportunity, there could be the potential for more negotiation with the home sellers. It says also interest rates are key. Keep a close eye on interest rates. Low interest rates could make buying a home more affordable, which we know, and be prepared to negotiate. The increased inventory and slower pace of price appreciation might give you more leverage during negotiations. You might be able to get a better deal than you would a few years ago. A little note on that. That does not mean every house is negotiable. Every home seller will negotiate. I have seen this talking to folks across the country, having different experiences with different home sellers, that even in an area that might be experiencing some downward pressure on the home sales, that doesn't necessarily mean that that home seller is going to be willing to negotiate. It takes some time. Some sellers are going to resist. They're going to resist big time on that downward pressure because they have an expectation of what they think they should get, what they probably think they're entitled to get, and they're not in line with what the actual market is telling them. Patience as a home buyer is the number one requirement. If you are a home buyer, you must be patient. If you are patient, you could absolutely come out of this thing with, on the winning side with a good deal. Now, on the home selling side, it says the same thing, moderate price growth. While prices are expected to rise, the pace of appreciation will be slower than recent years. You might need to adjust your expectations. Super important. And I know I talk a lot about this on this channel. If you are interviewing agents, interview at least three agents. It is important that you have three different agents to make sure that, number one, you get to that 20% agent. And I talk a lot about the 80% and 20% agents, where my belief is that over the last 28 years in this industry, I have specifically over the last 10 years have seen a decline in the professionalism of a large part of the real estate industry, where I anticipate from my observations, about 80% of the agents in our industry, in the real estate industry, are not earning the money that they're being paid. They're not professional. They're not fully educated on the market, and they're not looking out for your best interest. Some are, most are not. However, there is a smaller portion that is. And that's portion 20%. It might even be smaller depending on your area. But there is a small segment of real estate agents that know what's going on in their area. They're in tune with the market. They study the market. They are very good negotiators. They know how to leverage and use your home to get the most amount of money when you're selling. It is so important. And you don't necessarily know. It's not easy to know one from the other. Now, if you need help, there is a link in the description if you need help getting in touch with one of these agents. I will connect you with one of the agents that I know. I've been putting a list together for the last 20 years of the top agents in the country, and I have a list of about 200 agents all the way up from Alaska, all the way down to Miami, and everywhere in between, of the top agents, the 20% agents. So reach out to me in that link. I'll connect you, but at least have three agents, interview three agents, so that you make sure that your pricing is right. And it may not be what you want to hear, but it will be what you need to hear. It also goes on to say that the competition is going to be less intense. The increased inventory might mean that you'll face less competition from other sellers. And the focus on presentation, given that the market is becoming more balanced, is crucial to present your home in the best light possible. This can help it stand out from the competition. All of these things, all predicated on, working with either A, the right agent, and B, if you're going it alone, make sure you do your homework. Make sure you do your homework. And if you're going to do it alone, you're going to want to still hire professional photographers, professional videographers, get a pre-inspection. Make sure that you are handling this business transaction in the best way possible, because that will attract the best buyers. It'll also position you in the best light to get the most amount of money and essentially get that house sold as quickly as possible so it's not sitting on the market. Now, as we wrap up 2024, a lot of these predictions will come true. Some of them will not. And we're going to have to watch that as we head into the new year. And I would urge you to do your due diligence. Read the articles. Read multiple articles. Fact check. Cross-reference to make sure that that information that you're reading in that article is the same in other articles. Go directly to the National Home Builders Association. Go directly to the National Association of Realtors. They have a very, very good data set. I will continue to provide you this information, vetting it out so that you don't have to. Feel free to join me on my live stream every Tuesday night where I go into a lot of this information, whatever's happening and latest in the industry. If you want more information, though, on what else is happening in the housing market, you may want to check out these videos. I'm Jen Sylvester, and I'm here to help you be a savvy home seller.